Hello, everyone, and welcome back to another episode of Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up. So, this week we are going to be talking about some financial planning tips for entrepreneurs. Um, not on the investment banking or anything like that side, just on the strategic planning side. Things to really keep in mind as an entrepreneur, business owner, as you're going about planning for the financial side of your business, for the progression of you personally as well. Because it's really a lot of it's going to kind of commingle because how you manage your personal expenses and your finances does tend to pour off into your business as well. So we want to make sure that we get that all straightened out. So I wanted to make sure I touched on that topic today. So for those of you tuning in with me, thank you. And be sure to hit the subscribe button to the Sipping Wealth YouTube channel, as well as drop it a comment in the comment section. All right, y'all. So drop a comment in the comment section, even if it's a hey girl, how you doing? Um, any feedback on the live in general, any questions that you may have, go ahead and drop it in the comment section as well. All right, y'all. I'm gonna just go ahead and jump into the topic because you know we have lots to discuss and talk about. Ooh, hold on, y'all. Ooh, make sure we're good over here. Okay. All right. Let's get let's get it done. All right. So the first thing I want to touch on is when you are going into business, when you're wanting to really scale your business, move it to the next level, the biggest thing is to make sure that your personal and your business financials are separate. This is a huge issue with a lot of business owners. A lot of business owners tend to commingle their personal expenses with their business. They start swiping their business card for whatever expenses may come up. Or they just start pulling out the business card because it's the card that looked at them first when they opened their wallet. But we want to make sure that we are keeping our personal and our business expenses separate, for record keeping for one, taxes, and also any audits, things like that that may take place. You want to make sure that your personal and your business is separated, as well as generally when people open up an LLC, they're like, oh yeah, I opened up an LLC that's going to protect me in case of a lawsuit. Well, if you're commingling your personal and your business, you're essentially operating your business like your personal bank account. So you are now saying, hey, that corporate veil that was on that LLC, that limited liability feature, you're removing that protection because you are using your business for personal. So we want to make sure that there's a clear like differentiator as far as what's your business and your personal. Okay. And one of the biggest things is making sure that you have separate bank accounts, credit cards for the business, so that one, it streamlines and helps out with bookkeeping. And like I said before, all that good stuff. All right. The next thing, I know y'all heard it from me time and time again, and I'm going to keep saying it because it is so important. It is crucial, y'all. Make sure you have a budget. Okay. Create a budget. It is necessary. Okay. Make sure you develop a comprehensive budget that's going to outline everything, any expenses and projected income that's coming into the business. And this really helps with making sure that you are disciplined with, hey, this amount of money is going towards this. Hey, and being able to actually strategize properly, because you don't have a budget, you don't know what your money is doing. You're not telling your money to do anything, and then you look at the end of the year and you're like, "What? I generated that much income? There's no way." Well, you wouldn't know because you're not creating a budget. You're not actually figuring out, hey, where am I actually going, intentionally putting my money towards. So you really have to clearly define those things that you're going to spend your money on. or you're just gonna anytime an expense come up, blah blah blah, whatever. Now you're spending your money on whatever may come up versus, hey, I need to make sure this and this takes place because this is what's gonna actually move the needle in my business. All right. The next thing is to maintain an emergency fund. So just like on a personal side, you need an emergency fund on the business side as well, because if you're in business, things do come up. Okay. There's always some kind of fire or whatever that you need to put out, something that's coming down the pipeline, and you're like, oh my gosh, some kind of expense. So making sure that you have some kind of emergency fund, some savings, that's going to help out when your revenue runs low, because in business we have our peak seasons and we have our low seasons. So if during for example, my tax season, I'm over here living spending out outrageous, I don't have a budget, and I didn't create an emergency fund. When it's my lower peak seasons, now you're running into financial emergencies. You're running into situations where you're like, oh my gosh, I gotta seek funding. Oh my gosh, where is the money gonna come from? Well, you should have made sure that you are accounting for those periods, those non-peak periods, those low revenue periods. All right. So that your business is actually able to continue to move forward, and you're not having to figure out, oh my gosh, what am I gonna do? Oh. All right. The next thing is monitoring your cash flow, and making sure that you're monitoring it regularly. So it's one thing to hire a firm like Strategic Tax Accountants and say, hey, Strategic Tax Accountants, I want you to handle our bookkeeping, and I want to make sure that that our bookkeeping is on order. But this is another thing to make sure that you're actively looking at your cash flow regularly. So our bookkeeping clients, for example, our bookkeeping clients have the opportunity to sit with a bookkeeper every month. So making sure that, for example, and I'm using this for example, hey, that once a month meeting that you're having with that bookkeeper, that gives you that 45 minutes, give you the opportunity to sit down and actually review your numbers, review your cash flow. And even on another end where you're like, hey, I want to actually make sure I review my cash flow every 2 weeks, weekly, so that I could make sure, hey, I want to make sure that I'm very meticulous about my potential shortfalls, or maybe I have a liquidity issue, like maybe I had too much money locked up and I'm not able to move cash around and quick enough to make sure I meet certain expenses. This allows you, monitoring your cash flow regularly, it allows you to strategize and make these particular decisions. So this is why this is crucial. And for example, like my clients, hey, while we say, hey, I understand you could get busy life with your business. I understand that everything's very time consuming, but making sure you're actually spending the time to review your numbers, to look at your books. This is going to be a key game changer. All right. The next is to invest in personal and professional advice, and invest in it by an actual licensed, accredited professional. Okay, not someone that you was following on the internet, and you're like, oh yeah, they said there was a guru. Okay, there's a lot of misinformation out there, and I'm just not trying to have y'all get okie doke out here. So when you are seeking these professional advice, especially for example from an accountant or financial advisor, it's best to seek it from people that are licensed, okay, that hold a particular licensure, because they are regulated by certain agencies. So at least, because they are regulated by these agencies and these commissions and things like that, and now it gives you an extra layer of confidence and trust in that person, because hey, that it's not just this fly by night person that woke up a year ago, 2 years ago, and decided they're going to be a financial coach. Okay, so make sure that person's licensed, and look into their experience level as well. Research them, Google them. For example, you can type my name up on Google. Google Watling Charles, things will come up. Google the person that you're looking to work with. and see what comes up, see what licensures they hold, see if their licenses are active. But don't be afraid to invest in professional advice, especially from a financial advisor. There are a lot of people that are out here that claim to be financial advisors or that say that are financial advisors, that don't really hold the licensures for particular advising. So if you're just holding a life insurance, for example, or an annuity licensure, and you're saying, "Hey, I'm a financial advisor. Hey, I'm an investment advisor." No, you want to make sure that investment advisor actually has licenses for consulting and to be able to consult you with investments. So, um, very be very particular in this, but don't be afraid to invest in professional advice. It is a game changer as well. And if you're looking for professionals and things like that, feel free to reach out. I have an amazing financial investment advisor contact that I partner up with as well, and a firm that I partner up with for my clientele. But yes, the next is planning for taxes, because who don't want to plan for taxes? Of course, we want to make sure we are paying the least amount of taxes possible. Okay. And there's no better way of doing it than making sure that you get ahead of your tax bill or your tax potential tax issues. Okay. So making sure that you are set aside a portion of the income for taxes. Y'all, taxes is inevitable. We have sales tax, we have estate tax, we have income tax, we got taxes on everything, okay? On everything, okay? So we want to make sure that we actually set aside money for this. We don't want to get in the end of the year and be like, "Hey, could you find some way of paying of me paying $0 in taxes, and now you can't get funding for anything, and it's not, and now you're avoiding taxes illegally." There's tons of people that cases where people have been found where they maybe overstated their losses or took in their losses from other years and used it in future years to try to take advantage of decreasing their tax bill again. I'm not going to say who it is, but you know, it it was an old president. I'm just saying, allegedly. But yeah, so making sure that we're actually planning for taxes, okay, and that taxes are inevitable. That we make sure that even though we want to make sure that we're paying as low as an amount of taxes as possible, that we do have money put aside for it, because there's nothing like coming to the tax deadline and not having the money. Now you're going to get hit with penalties, which can go up to 8% per 8% for the IRS, and that doesn't even include the interest. For interest, but that doesn't even include the failure to pay penalty, and then there you also have the late filing penalty as well. So just kind of avoiding the penalties. A lot of business owners don't end up filing on time because they're afraid of their tax bill. But you're getting hit with all these penalties, and as well as the interest that's accumulating at 8%. So eventually it could go up to 8%. But this couldn't be avoided by just making sure that you set aside some money for it, and just making it a quarterly or monthly, I would say even monthly thing, depending on the amount of revenue you have running through the business. Just kind of reconciling and thinking, okay, how much money did we bring in this month? How much do we have in expenses? And when you have the right accounting team and you're properly utilizing the team that's there for you, you are able to make sure that you're on top of these things. All right. The next thing is, don't be afraid to use a software, y'all. Okay, technology is your friend. Okay. Use an accounting software. Okay, please. All right. So we are going to use a nice, reliable financial software. Even if you're like, "Ooh, I'm just starting off in my business, and QuickBooks is a little expensive for me right now." Well, you can do like FreshBooks. FreshBooks is like a simpler version of QuickBooks, a little cheaper, quite a bit cheaper. Maybe you want to start there and then eventually go up to QuickBooks. But use these softwares. There's tons of softwares. I just said two, but there are hundreds of different softwares, accounting softwares, invoicing, depending on your industry. There are different softwares that are available for industry specific people, restaurants, hairstylists, the list goes on. All right. Don't be afraid to utilize these accounting softwares to make your job easier. All right. Mine as well. You already have the task of running a business. Okay. You want to make this as simple as possible. You want to make sure that this part of your business is covered, because this part of your business is going to be the game changer on whether or not you're able to sustain your business and you're able to actually profit from your business, making sure that your business is profitable. All right. And that's before you even get into scaling. Okay. The next is to control your overhead costs. Look, y'all be putting the cart before the horse. Okay. Want 3, 4 locations, and you haven't even um, gotten down to making one profitable yet. Okay, so we want to make sure that, hey, this location, this particular thing is profitable before we go ahead and add additional costs. We want to make sure that we can actually afford to pay the employees that we're hiring, or like for multiple months. Okay, so you don't want to hire an employee and be only financially able to sustain them for 1 month. But when you're thinking about hiring an employee, you want to think, okay, for that employee, I have to pay them $50,000 for the year. You want to make sure you have that $50,000, that if anything comes up, that you're able to actually meet that payroll cost, that $50,000 to pay that employee. You don't want to say, oh, I can pay the employee for 2 months and we just gonna see what happens for the others. Like, that's not how you hire. That's not how you scale. You want to make sure you minimize, you control your overhead costs. If you don't need a brick and mortar right now, maybe you have to start with online shop. Maybe you have to start within someone else's brick and mortar, something like that. Start there first, build your clientele, and then move. But you want to work with as minimal overhead costs as possible. Get your business to a stage where it's actually showing a good amount of profit, then move to the next level. We keep putting the cart before the horse way too quickly. Like, we trying to do the most. And that's what gets you out of business within a year, within 2 years, within 3 years. You out of business because you wanted to do the most. You wanted to redecorate and have a lavish brick and mortar, but you haven't even started making a profit with the business. All right. Okay. I got a little heated, y'all. I mean, I just be so passionate. All right. Diversifying some revenue streams. Something else I want to make sure that I hit on as well. So explore different ways within your particular business that you can generate additional income. So maybe it's, hey, we want to come out with another resource. We want to offer ebooks. We want to offer um, a coaching plan. We want to offer this as an addition to our firm, whatever the case may be. You want to diversify your revenue stream so that you don't just become dependent on one source of revenue or income. It helps with making sure that you are financially stable and the longevity of the company. All right. Hold on, y'all. I want to make sure I'm just flowing, y'all. I forgot my water. Uh, okay. Okay. All right. The next thing is to invest in insurance. Get in some insurance, please, because you don't want to have to need insurance and or get to the stage or the situation where you're like, oh my God, I wish I did. I wish, shoulda, coulda, woulda, when you could have had liability insurance for the business. You could have had errors and omission insurance. You could have had health insurance. You could have had life insurance, all that through the company. You know, you can have life insurance and health insurance from your own company. These are deductible expenses, okay? You can structure it this way. It's a great way to make sure that your retirement plan, your insurance, whether it's life and health insurance, your liability insurance, that's all covered through the company. All right, so definitely make sure that you're investing in being insured properly. Again, if you needed any assistance with any of these steps, feel free to reach out. You can book a call with my firm, Strategic Tax Accountants. The next I want to talk about is making sure that you're planning for retirement. I kind of hinted at it on the last one, but planning for retirement, that is huge. There are SEPs, solo 401ks, self-employed pension plan SEPs, that you can actually invest in with your company. So making sure that you're investing in a retirement plan or having a retirement plan within your company. This makes for a great deductible expense. And not only are you saving for your future, you're able to decrease your tax bill by just doing this. It's it's a genius, amazing strategy. I mean, it's if you're a business owner, uh, for my people that have S corps, oh my gosh, like there's just so much that you can do as far as your retirement planning. The list goes on, but make sure that you are planning for retirement as a business owner. Um, you know, we like to think that we're going to be kicking forever, but at some point, you get tired, and at some point, you want to make sure that you have the option to retire. But you're not going to have that if you didn't actually plan for your retirement. And a lot of the time, these are your years where you're generating a lot of revenue. So these are also the years where you should install a retirement plan within your company. Um, the next I want to hit on is to manage your debts. All right. When it comes to debt management, y'all, you already know. To keep it straight, make sure that your debt is not controlling you. Basically, like you shouldn't be so over leveraged where you're like, oh my gosh, I don't know how I'm gonna pay all these creditors next month because I'm in my slow season and I'm not bringing as much revenue. You never want to be over leveraged that way. You want to make sure that you have a healthy relationship with that, and to your debt to income, your debt to equity ratio. So is debt a bad thing? No, I don't believe debt to be a bad thing. I think you should be able to leverage debt to get to the next level, to get where you need done. And a lot of times you need debt in order to scale and scale a particular way. It's okay to leverage these things, but it's not okay for these things to leverage you, to take advantage of you, to stress you out, So make sure that you have a healthy relationship with that. Um, for my inventory based companies, my companies that are selling goods, clothing, accessories, lotions, whatever, even food, my restaurants. Tracking inventory is so crucial because you spend so much money on waste, overstocking. Now you have a bunch of waste because you have food spoilage. I'm using restaurant for example, or you have waste. You don't even realize that, hey, your team is using throwing out so much of the goods or overusing supplies and things like that because you're not tracking inventory. These are how these large chain restaurants are able to scale because they have gotten the recipe down to the milligram. Okay, they will not use an extra gram of flour with that chicken sandwich. Okay, they have gotten it down to the science of, and that's how they're able to make sure that they are not overspending on their goods, and they're able to create another Chick-fil-A, create another Burger King, create another TGI Friday, create another Ale's House, because they have gotten it down. And if for their items that are maybe there's some spoilage here and there it's accounted for. All right, so making sure that you are tracking inventory properly, accurately. All right, the next is making sure that we're strategically planning, tracking our goals, making sure that we're investing in the growth of our firm. So making sure that we have our marketing research, we're continuously looking at our how we can be better as a firm. Continue looking at market research, continuously developing our service and our systems within our company, because that's what's going to keep you in the game longer. That's what it's going to allow you to be in business for the long run. The last second to last thing I want to hit on is negotiating. Negotiate. Y'all do not be afraid to negotiate. Okay. Negotiation is your friend. I know sometimes you want to be like, hey, I just want to, just pay the person their price and just be done with it. But sometimes you have to negotiate better terms with your suppliers, with your clients, with your vendors. You have to negotiate better terms with them. So don't be afraid to do that, because sometimes they leave error, or they leave room, not excuse me, not error. They leave room for negotiation, and that's fine. That's going to get you the best price or the best cost for whatever you're asking for. All right. Am I glitching? Ooh. Okay. Um, I think my Wi-Fi is not strong. I don't know. All right, y'all. I don't know what's going on. The last thing I want to hit on is making sure that you are seeking funding before, like, you're stretched and you're like, I got 30 days to come up with so this and this. Like, that's not when you want to start seeking funding. You want to start seeking funding when business is good. Okay. Go ahead and seek funding. Go after those grants. When business is doing this thing, seek the funding. And that's when you move the funding into something that's going to generate more income. Maybe you're going to put that into additional team. Maybe you're going to put that into a better marketing strategy or system. Maybe you're going to put that into marketable securities, whatever, or a retirement fund for the company. You want to start seeking funding when the business is doing well, not when you're like completely stretched, because when you're completely stretched, a lot of the times business owners tend to take on terrible terms with their lenders, and then they're looking at paying back a loan at 15-18% when they could have got a loan at 7-6% before, if they weren't so rushed to get funding. All right. So hopefully this was helpful. If y'all have any questions, make sure that you reach out, and also make sure that supporting the Sipping Wealth channel and page by hitting that subscribe button on YouTube channel, and making sure that you are engaging with the post and sharing it with your friends, loved ones, followers, all that good stuff, and dropping in, y'all. So I will see y'all next Tuesday for another episode of Sipping Wealth Live. Y'all have a great, amazing day. And let's not forget, let's wealth up.